So it's 2023 and you're looking for ways to improve your financial habits and want to start investing. Or you've already started and want to grow your investments but worry about all that seems to be going wrong in the world with inflation and rising interest rates. Wouldn't it be nice if you could get advice from someone who's experienced to help you navigate your financial journey? Welcome to The Eighth Wonder, a channel dedicated to making compound interest your best interest. Warren Buffett, who is widely regarded as the greatest investor alive, has over the years given some very good advice on things that we can do to make progress on a financial journey, especially on how to invest. Today, I would like to explore some of his advice and talk about how it can be beneficial to anyone who's looking to make this year a good financial year. Pay attention to what he says in the following clip because it's something very relevant to what's going on in the world right now.
The best investment against inflation is to improve your own earning power, your own talents. Very few people maximize their talents. And if you increase your talents, they can't tax it while you're doing it. They can't take it away from you. So if you become more useful in your activities, your profession, doctor, lawyer, whatever it may be, that is the best protection against a currency that might decline at a rapid rate.
Basically, what Warren is saying is that you need to invest in yourself. Watch the rest of the video and at the end, leave a comment saying how many times I said his name. Investing in yourself means getting the necessary knowledge and skills that can increase your earning potential. You can do this in a number of ways, such as enrolling in an institutional class where you can learn those necessary skills, finding a mentor who can teach you whatever it is that they do, reading self-help books, buying programs or online courses from reputable teachers, and by becoming a subscriber to this channel and watching more videos like these, which help you learn useful lessons that you can apply in your life. Warren furthermore had this to say.
The best investment, passive investment, I think, is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency. But it's interesting. In the United States, the value of the dollar since I was born has declined by 94% to 6 cents. So inflation is a very cruel tax on people who believe in fixed dollars, but things can work out pretty well even during inflationary times. I mean, if somebody told me when I was born, that the dollar bill is going to go to 6 cents, I might have said, let me go back. I'm not interested in emerging into that kind of a world. But actually, it's worked out pretty well, so I have no complaints.
The second thing that Warren tells us to invest in is a good business, whether it be your own or someone else's through stocks. Businesses can be a great way to ward off inflation because when things get expensive, the business can raise prices and keep making profits. That is what he was referring to when talking about pricing power. Good businesses make more money in inflation, partly due to the fact that they are trusted and have built up a reputation for themselves. To further illustrate this point, here's something else Warren has said about good businesses.
Brands are moats. I mean, obviously, and if you try to, this product is selling, to hundreds of millions of people who want Coca-Cola. If you say, I'll sell you something for 2 cents less, or I've got some celebrity's name on it. They actually, Richard Branson tried Virgin Cola in the United States about 15 or 20 years ago. And a million others have been tried. But some products have terrific moats. Probably Elmer's glue does, WD-40. I mean, there's just certain things that you are not much inclined to be dissatisfied with and see. And I would say that incidentally that the iPhone, has a terrific moat. I mean, people that have an iPhone, or maybe have some other phone, but they want to continue with a product that they've God, they want the new version. It's just easier for them. They've learned how to do everything, and their life's built around it and all of that. And moats are very useful. Costco has a moat in people's mind. I mean, Amazon can raise the price of Prime, 20%, and you can't do that unless you've built something within that image of the Amazon Prime that's based on reality that you're going to get a lot for your money and you're going to want to use it. And then you can raise prices $20. But if you're selling, if you're selling some commodity product, you can't do that.
So there you have it. Invest in good businesses in order to protect your money. Warren speaks of a moat, which basically is an aspect of the business that makes it more defensible from competitors. This word is derived from deep defensive ditches that were normally built around castles in the olden days in order to make them more secure and safe from enemy attacks. Now, with that being said, it is important to have the right kind of mindset when investing in businesses, especially when it comes to stocks. Here's what he had to say about stocks.
I never know what markets are going to do. There's never been a time in my life when I know what markets are going to do over a long period of time. They're going to go up. But in terms of what's going to happen in a day or a week or a month or a year even, I've never felt that I knew it, and I've never felt that it was important. I will say that in 10 or 20 or 30 years, I think stocks will be a lot higher than they are now.
I know you look at things like that, but I also know that you look at stocks and try to decide if they're fairly valued, if they're overvalued, if they're looking cheap at this point. And we have been waiting for a correction for an awfully long time. That's finally come. Do stocks look cheaper to you, just based on where we've come?
Well, anytime stocks go down, as far as I'm concerned, I like it because I'm a net buyer of stocks. I've been buying stocks ever since I was 11 years old. So when stocks go down, it's good news. Just like when hamburgers go down, it's good news, or Coca-Cola goes down, it's good news in terms of anything I buy. But stocks are going to go down. You could probably look it up as to what percent of the days of the, since I was born, they've gone down, and maybe it'd be 30% or something like that. And you can't predict what stocks will do, but in the short run. But you can predict that American business will do well over time. And just take the 20th century. Stocks went from 66, the Dow average, 66 to 11,497, and you were getting 3 times as much in dividends as the whole average was selling for at the start. And you had 2 world wars, and you had a Great Depression, flu epidemics, all kinds of things. American business will do fine over time, and if you own a piece of it, and if you don't beat yourself, the only person that can cause you to get a bad result in stocks is yourself.
Yeah, unfortunately, that's the biggest problem, is trying to fight yourself in some of these situations.
Yeah.
Have you been buying more stocks lately just because prices have come down? Have you upped your percentages and other things just
We're
because?
almost always a buyer of stocks. So we have bought more stocks since the end of the year. But we earned 17 and a fraction billion last year, and we had our float go up $4 billion, which is additional money available. And so we're almost always a buyer of stocks, and we're a more aggressive buyer when they're going down. I mean, I feel much better when they're going down, but it's hard to think of very many months when we haven't been a net buyer of stocks.
Investing in stocks works in the long term. So when you buy, remember that the fluctuations don't matter all that much as long as you're invested in a good business. I particularly like the fact that he said that he can't predict what stocks will do in the short term, but he knows that in the long term, they will go up. This approach makes sense, especially when you consider the effects of compound interest over long periods of time with dividends being reinvested. It may not make you rich overnight, but it will reward you handsomely. So this advice goes way further than just this year. Take a listen to what Warren had to say in this clip.
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because a stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock?
Yeah, selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along next day and says, "I'll pay you 15," you don't sell it because the quote's 15. You look at the house or whatever it may be. But some people are not actually emotionally or psychologically fit to own stocks. But I think they're more of them would be if you get educated on what you're really buying, which is part of a business. And the longer you hold stocks, the less risky they become. Whereas the longer the maturity of a bond, the more risky it becomes. It's not easy psychologically for many people, but I've been teaching since I was 21. I taught my first class on investments, and I had a class last week with 11 schools, 220 students, and some of them get it and some of them don't. People would rather gamble. I mean, the idea that you can double your money in 6 months, that's just going to, it's why people go to the races, why they go to Vegas, whatever it may be. They even know the odds are against them, and they still do it. I mean, it's a strong instinct to want to get rich fast, and I don't know how to do it.
So basically, you need to have the right kind of temperament and emotional intelligence to keep holding on or even buy more when prices go down. A get-rich-quick mentality will not do the trick. On the stock market, we invest. We don't gamble. Given that Warren started investing when he was 11 years old and is now in his 90s, it's safe to say that if anyone knows a thing or two about stocks, it's him. Listen to what he had to say about Coca-Cola, which, by the way, he has a large ownership of through his company Berkshire Hathaway.
I'm the kind of guy that likes to bet on sure things, Muhtar. And, since 1886 and Jacob's Pharmacy, you've just seen year after year after year till now you've got 1.8 billion, 8-ounce servings a day around the world. And when I joined the board in 1988, I don't remember the exact figure, it was a whole lot less. And you've got fewer shares outstanding now, and you've got way more per capitas, and you're gaining share around the world. So those are the kind of businesses I like. I like wonderful brands. You got to take care of them, but if you take care of a great brand, it's forever. And those are the businesses I like. We own 400 million shares of Coca-Cola stock, as you know. We've never sold a share, and I wouldn't think of selling a share. I think, well, in my lifetime, since 1930, real GDP per capita in the United States has gone up 6 for 1. Think of that, 6 for 1 in one person's lifetime. We have not lost the secret sauce. So that's the kind of future I see ahead too. And if that's the future, you want to own businesses that are going to participate in that future. And we've done that for decades now at Berkshire Hathaway, and we'll continue to do it.
I think it's very clear that Warren Buffett is one who can identify and believes in good businesses. He invests in them for the long term and knows that they will continue to do well. You've heard him speak a lot about Coca-Cola. This is a classic example because, as he said, he has owned their stock since 1988 and to this day has not sold a single share. Now you might be wondering how you would know what a good business for you to invest in is. Here's a little story from Warren that can help you get started.
Picture Omaha in 1937. I was 7 years old and no air conditioning, so the summers were hot and humid. People went out on their lawns at night just to try and cool off, and I got the idea that maybe I could sell them what you would call soft drinks and we called pop. So I went around to a bunch of gas stations, and in those days every gas station had a cooler with varied soft drinks in it, and it had a little opener on the side and something to catch all the bottle caps. So I went around and collected all the bottle caps for weeks at these various gas stations. I collected 8,000 of them. And then I sorted them all out, and I saw that they were Coca-Cola overwhelmed everybody else. So I decided to hook myself up to them. And they were these little silver-like ones in those days. And my grandfather had a grocery store, so I went to my grandfather and I said, how about giving me a deal on Coke so I can sell it around the neighborhood? And he sold me at the rate of 6 bottles for a quarter, and I went around and sold them for a nickel each. And I sold out every time. And I had no inventory, I had no receivables, I had the best business I ever had. But I made one mistake. I didn't put the money I saved into Coca-Cola stock. But I rectified that mistake some years later.
Basically, what you can learn from this story is that you can research what those good businesses are. It's always a good idea to start with the ones you know, just like Warren did. There are a number of resources that you can use in order to find all the information you need to help you decide which company to invest in. Warren Buffett is obviously an American and therefore speaks on American businesses, but the principles that he shared can apply to any business anywhere in the world. So those are the tips from the great Warren Buffett to use to your advantage this year. Invest in yourself, invest in good businesses, and invest for the long term. All the best for the year ahead. Hope you'll make the most of this advice given and that you will get great returns. If you're still here at this point, comment below and say what your favorite piece of advice was. If you have found value in this video, please leave a like and share the video with a friend. This helps to get the video to more people so they can learn all these great lessons too. Consider subscribing to the channel and clicking on the notification bell so you never miss a video and the learning process never stops. Thanks for watching. Hope to see you on the next video, but until then, stay invested.